Okay, now let's talk about everyone's most favorite thing, taxes. So, as the old saying says, there's only two consistents in life, and that's death and taxes. But for some reason, no one actually explains how taxes works to you. Nobody gives you a rough idea of what you should expect to pay in taxes whenever you're an undergrad in high school. I feel like this is the most consistent thing in life is we all have to pay taxes. So I'm not really sure why nobody talks about it, but we're going to talk about that today, especially in regards to if you're a freelancer. So most of how I like to prepare my students is to be a freelancer because that's where the market is right now. And if you're a freelancer, then you are self-employed. And being a self-employed person means that the responsibility for paying taxes is on you because you are your own employer in some ways. So let's talk about what that looks like. If you happen to work, like a job where you're salary on salary or something, like you probably don't even think about what you pay in taxes because your organization or whoever you work for pays for it. But if you're self-employed, if you're a freelancer, you got to pay the taxes yourself. Okay? So the first thing that we have to realize is that you have to pay taxes on all money that you make. There are not exceptions. You have to pay taxes. Now, we're going to talk about write offs and how to avoid paying more taxes than you're supposed to, but you're responsible to pay your taxes if you are making money in the United States. Okay, so a good safe place to start for most self employed people is you need to be withholding 20 to 30% of your income. That, yes, exactly. If you get $1,000 check from a client, then $200 to $300 you need to hold that back so that you can pay the government. And that sounds like a lot. That's because it is. It costs a lot of money to run the country. Okay, so you have to hold this money back. When do you pay the government? So ideally, you should pay every quarter. Okay, and so I've listed out some dates here that are the typical dates that you would pay your quarterly taxes. So for your January 1 through March 31st, that would be April 15th. The next date to pay the next quarter of your taxes is June 15th. The next is September 15th, and then back to January 15th for your last bit of taxes. And so if you are in um, a regular, uh, like cycle of paying taxes every quarter, then you're going to be in good shape. You're not going to have to pay any penalties or anything like that. If you wait and pay your taxes when you file your taxes, you're going to have to pay a penalty for paying your taxes late. So you have to pay every quarter. All right. Now, if we're giving this much money to the government, then there's a couple of ways around paying the full amount for taxes. Now, I would say you should definitely withhold that amount no matter what. Don't bank on that you're going to be able to deduct a bunch of things off of your what you need to pay on your taxes. But if you're wise and if you use some of these strategies and if you keep some of these things, then it will keep you from overly paying on your taxes, and actually you will pay less than that percentage of your income in taxes. Okay? So the first thing is that all of your business expenses are deductible against your income. So say if you can deduct a percentage of the money that you spend on your business, that counts against your income. So I'm just gonna give you a rough example. If you made $100,000 in a year, but you spent $30,000 in business expenses to run your business, then technically you only made $70,000 a year, not $100,000 a year. But if you don't keep up with the receipts and all that for that $30,000 you spend, then the government believes that you made $100,000. So that's why it's important for us to keep up with our business expenses. So, what are some of those business expenses that we would think to write off on our taxes? Okay. If you're a photographer, of course, your equipment purchases, your computer, all the things that you need to run your business, your advertising cost, your website, your web hosting, even a percentage of your home internet if you work from home, a percentage of your cell phone bill because your clients are calling you, you're sending emails from your phone, all of that. Um, if you have an office space, then that's deductible on your taxes. And if you have a home office, so if you have a spare room in your house that is devoted to your job, then you can also deduct a part of that on your taxes. And I'll explain how that works here in a little bit. If you have memberships, if you rent equipment, all of your travel expenses that are related to your business, if you're eating meals while you're working on assignment somewhere outside of town, part of that is deductible. If you do client meetings, part of that is deductible. Mileage is a big one. We're going to talk about mileage. And then, of course, like educational materials, books, photo books, anything like that. All of that counts against your income. So you have to pay less percentage in taxes, okay? But to do that, you have to keep good records. You have to keep all of your documentation and all of your receipts for at least 3 years, okay? And the way I keep an envelope and I have a date on it, and I put in that envelope everything from that year just to start off in a really broad way. Some people have different files for each different category and they file their receipts that way as they go. I just wait till the end of the year and I take my big envelope and I break all my receipts up in the proper categories, but I keep all my receipts, okay? And every time I keep a receipt, I just think about that is free money. That is money that I'm not going to have to pay the government or a percentage of that. So every receipt is free money. So it's more money that you get to keep in your pocket, all right? So let's talk about percentages, because just because you have a cell phone doesn't mean you're going to deduct every cost of your cell phone on your taxes, but you have to reasonably calculate, because you have to sign an oath that you're being honest. You have to reasonably calculate how much you use, say, your cell phone or your internet for your personal business. Whenever I was working freelance, it was very normal for me to use my phone for 50 or 60% for business, and 40% for personal. And so I would deduct 60% of my monthly phone bill and the cost of my phone on my taxes every year. Same for my internet. I work from home, so I just did the math on like how many hours a day am I on the internet for my business as opposed to just for no other reason, just for fun. And I deducted that percentage because you have to have those things to run your business. The home office one is also a great one. If you work from home, if you have a spare bedroom, the square footage of that bedroom or that office, as long as it's only devoted to your business and your craft, like it can't just be like a everything room or spare bedroom that people sleep in all the time. It has to be devoted to your business. You can calculate the square footage and the percentage of that square footage against your house. So say that it's 10% of your home, like the square footage of your office. Then you can deduct 10% of your mortgage costs, 10% of your rent, 10% of your utility bills, 10% of repairs that happen that you make on your house. You can deduct all that on your taxes, which is substantial. But if you don't keep up with that, or you don't utilize your office in the correct way, you're just leaving money on the table. Another big one is travel expenses. If you are a working photographer, you probably spend a lot of time driving around in a car, going to assignments. You might catch a plane for an assignment here and there. If you pay for those things, then you can deduct them on your taxes. Plane tickets, train fare, public transit, parking, hotels, part of the food that you've eaten, the cost of the food that you've eaten while you're on that trip. Those things have deduction rates, and you have to look them up and calculate, for some of these things, what it would be. Mileage is the big deduction rate that you should keep up with. As of 2019, you could deduct 58 cents per mile that you've driven for business use. So say I drive 100 miles in a day for an editorial shoot that I have to go on. I can deduct $58 on my taxes. So if you keep up with your mileage, that is going to add up so much. Every year, that's a huge deduction for me. So let's just do like some quick math. Here I have an example. If you drove 10,000 miles a year, say, and that's really not that unreasonable for a freelancer, at 54 cents a mile, this is the old rate, then that would be $5,400, or with the new rate, it would be $5,800. So you can deduct $5,800 on your taxes, which is substantial. At the end of the year, that is a substantial amount to put against, and that keeps you from having to pay a lot of money on your taxes. But you have to keep up with good records. Like that is an absolute must. Some things that I do is I keep a spreadsheet that's just like a Google Doc. It's I use Google Sheets, and then for each trip I write the date, where I was going, as much information there as I can give, and then I keep up with the mileage. So I have a column for each one. So at the end of the year, I can go all the way through and see what days I was driving, where I was going, and the total mileage of each of those days. And then I just add all that mileage up, and that gives me my total mileage. So it's if you for some reason forget to write that mileage down, you could always go and do like use Google Maps and actually retrace your steps, and that'll get you probably not every mile that you drove, but it'll get you close enough to be honest. When in doubt, I don't put mileage on there that I'm not totally sure about, just because I want my records to be up to snuff. And if you get audited, you want to make sure that you can prove all the things that you are asking for deductions on. Okay, so keep up with your mileage. It's very important. Okay, let's talk about some forms that you might see, just some really basic ones. A W-2 is really common. That's one that you've probably all heard of. That's when an employer you work for full time, they give you a W-2 and they've already taken the taxes out. If you're a freelancer, you're not going to get one of those. Typically, if you're a freelancer, you're going to get what's called a 1099, and that's just for contract workers. They don't take any taxes out for it from a 1099. That is your responsibility as the recipient to withhold your own taxes if you get a 1099. Okay, and the government knows that they paid you because that business also files the 1090 files with the government to show that they paid a contract laborer and gave them a 1099, which is you. And so you have to be responsible for paying taxes on that income. How you would do that is typically through a Schedule C, also called a Form 1040. You could just Google Schedule C and learn a lot more about how that works, but that's the simplest form that I file every year if I have extra income or if I have freelance income. So if you're doing work on the side and you don't own your own business and you don't have a small business, it's just kind of extra income here and there, or freelance income on top of what you're already doing. This is what you would file if you didn't have your own business, like if you didn't have a business license and you were just a contract worker. You would file your 1099s on a Schedule C for your taxes, okay? So when we're thinking about this, I should make a point that the reason that you have to charge more as a freelancer than somebody that's on staff somewhere is because you have more expenses. You're responsible for your own insurance. You're responsible for your own equipment. You're responsible for your car. You're responsible for your office, your computer, all these things. And you're responsible for paying your own taxes. And so you need to price when you bid for a job, when you quote somebody on a job, you need to know in the back of your mind that 20 to 30% of that, and I always withhold the maximum amount just to be safe, that's not even going in your pocket. That's going straight to the government. And so if you know that you need to make $1,000 in a week for a several day shoot, then you need to factor in what is taxes going to be on top of that and add that to it and bid them above $1,000, so that you have the percentage to pay the government, and then you can make the money that you have to make to pay your bills too, because the government is going to get their money. That's what they do. So you have to think about pricing, also keeping in mind that you're going to have to pay taxes as well. Okay, so let's just do some simple math and look at, kind of in a very generic, basic way. I'm not an accountant. I've just worked as a freelancer and as a self-employed person in the past, and so I'm going to try to just distill this down into like very, very rudimentary, way in a very rudimentary way, so that you can kind of understand how this functions and how this impacts you as a self-employed person. Okay, so let's just grab a couple of numbers. Let's say that you make $40,000 a year. Okay, so 30% of $40,000 is $12,000 that you are responsible to pay the government. Okay, so if all the income you made at the end of the year was equals $40,000 without thinking about your deductions, on the front end you owe the government $12,000 because they see that you made $40,000. So let's look at our deductions. Let's say we had some deductions, and let's see how that impacts the taxes that we have to pay. So right now we owe the government $12,000. Okay, so these are like very reasonable. I look back on some of my years and some of my taxes, and like this is pretty common of like what I would spend in a year possibly. So equipment purchases. Maybe you bought a camera body or a lens. I mean, this is actually not $2,500 a year for equipment purchases. Is very, very low, very low. You did a little website advertising, that just paid for your website, $300. Your phone bill, $250, which is still very, very cheap. It could be double, triple that possibly. Your home office, $960. Some professional developments that you took a little workshop here or there. You had a plane fare to go somewhere, $2,000 plus hotels. You did a couple of plane rides to shoot a job. Meals, $250. Your mileage, say you drove 10,000 miles, and this is the old rate, for $5,400. And then some of your educational materials, say you bought photo books. You invested in some things which you should be doing. You should be buying things like photo books and instructional videos and subscriptions to things that are benefiting you and helping you grow as a creative person. And that could easily be $300. I could easily spend $300 on photo books. So easy. So with that very rough math, and that is a very reasonable amount of deductions. Let's just say we end up with about $12,000, $12,210, okay, of deductions. And some of these things like meals, you can only deduct half of your total cost. So I'm kind of just boiling this down to be as simple as possible. So let's just do the maths. So $40,000, and we take away the $12,210 for your deductions. That leaves you with only $27,790 in taxable income, as opposed to $40,000. Through the government's eyes, through what they can tax you with, it's only $27,000, almost $28,000. So the taxes that you owe now, after your deductions, is a little over $8,000 instead of $12,000, okay? Because it's a percentage of your income. So if your income is lower because you were spending all this money for your business, then you're going to pay the percentage of just the income that you made. And so the difference in before your deductions and after your deductions is $3,663. That means that you save $3,663. That is like a very that you would probably deduct a substantial amount of money more than that, most likely. That's a very conservative guess of what your deductions could look like. But you have to keep up with them. You have to have records for all these things so that when and if you get audited, you have all the receipts, you have all the mileage, you have documentation for everything. So to me, it is worth keeping good records to keep from spending $3,600. And there's been years past where it saved me $4,000, $5,000, $6,000 that I did not have to pay the government. You're going to have to pay the government taxes, but there's no point in paying them more than what you owe them, okay? So if you're a freelancer, keep good records, keep up with what you're spending on your business, keep up with your mileage. That one is super important. Keep every receipt, and at the end of the year, you can go to an accountant and have them break everything down for you. You can attempt to do it yourself. That's up to you. That's your discretion. But for me, if that means that I'm avoiding paying over $3,000, $4,000, $5,000, that's worth the extra effort throughout the year for me. And so even with this conservative estimate, it could be substantially more than this. I'm just trying to give you a very like small, rudimentary, basic idea of how this would impact you. So take this stuff seriously, keep good records, and it will help you so much as you walk into the workplace and the marketplace as a freelancer. So I hope this was helpful. If you have any questions about this, I'll answer what I can. Again, I'm not an accountant. This is just as a freelancer, the things I've learned over the years, the things that I keep up with. I'm sure there are other things that could be helpful too. If you have other things that you know about that you deduct often, let me know. I would love to share that information too with everyone. So I hope this helps, and let me know if you have any more questions. Thanks.